So I am a venture capitalist that we do have this double bottom line strategy to both bring financial returns and social returns. And it's been a very wild ride and something that it's growing. And I'm going to talk to you a little bit about that in the context of the next administration's priorities. I do just want to, it was a fascinating panel before lunch. The field is so fast moving. I just want to correct a couple of perhaps misperceptions that came out of that panel. One is about Ivanpah and BrightSource, and this is a good example of the role of venture capitalists. Actually, neither Andy nor Michael were right there. The people that first financed Ivanpah were venture capitalists, and we were one of them. I have to say, it's not our most successful investment. But I'm very proud of Ivanpah and the role that it's played in bringing large-scale solar thermal power. It's probably going to be developed more in other countries than in Southern California at this rate, but it's played a critical role. And that's the role of venture capital. We invested in that company before PG&E ever showed up. We did not have a signed PPA, and so that's really something that is a strength of our economy and of our society, is that we do have crazy people like me that are willing to do that kind of thing with very little of a file to refer to. The other misconception, which is really good news, is that while it is true that rooftop solar started as something accessible only to the more wealthy part of our population, the good news is that through the investment tax credit and the ability of innovative lease financing and now loan financing, rooftop solar is actually accessible to a much broader demographic in our country than ever before. And in fact, in California, if you look at, I'm on the board of Solar City, if you look at the fastest growing demographic for Solar City and also Sunrun, which represent almost half the market, so it's a good proxy. The fastest growing segment is in the Central Valley and in homes that are median income or below. So this is not a product for the rich. It used to be, but as with all innovations, you go down that cost curve, you scale, you develop, in this case, financing innovation, and you democratize access to clean energy. And so I think that it's important for us to understand we have some successes under our belt that do address the broader issues around income inequality, because obviously lower income folks in the Central Valley have high air conditioning loads, high electricity bills, and so anything we can do to help with that is going to have a huge impact. So moving on to the agenda for the next president, just want to give a little bit of a backdrop, because we've been at this now since about 2003, so we've got some good data. I want to first and foremost debunk the myth that support for clean energy investing is disappearing. You read a lot about this. In fact, it's growing. It had we had some tough times in that 2011 time period, but globally, we're on a growth trajectory, and it is a global market. We have tiny little companies. We have investors from South Africa, from Kazakhstan. We have a French oil company and a Series A microgrid company. This is the good news. We've got strategics from all over the world coming to fund these companies, in addition to the emergence of sophisticated venture capitalists, later stage investors, and family offices, which I'll talk about in a minute. And where are those market opportunities? They have evolved. I mean, we've been at this, as I say, since the early 2000s, when it was solar and electric vehicles and different kinds of wind. But look at the way the opportunity set has expanded. And we wouldn't make, as a venture capitalist, we wouldn't make an investment in an electric car anymore. I mean, we've kind of been there, done that, worked out well, but there's a whole lot of opportunity to green the grid that will supply electricity to our vehicle fleet going forward. There's microgrid development, which is possible because of the advances in storage technology combined with demand response software and renewable energy. We couldn't have invested in those kinds of companies even a few years ago. I know there was some talk about the 1.3 billion people that don't have access to electricity, how are we going to fix that? Well, people like me are investing in companies that are going to fix that. And guess what? Those efforts are informed by the US venture-backed companies like Sunline, like SolarCity, that figured out how to drive down costs. And now we're taking that to sub-Saharan Africa, to Tanzania, to Rwanda, to Uganda, and creating low-cost solar and storage with efficient lighting that will allow people in rural Tanzania and other countries to get electricity, clean electricity, for less than they pay for kerosene, which of course is a bad environmental actor. So again, this is an investment we would never have made even 5 years ago, and we couldn't have made it because the costs hadn't come down enough. But all the learnings that we put into and derived from investing in US solar are now going to address the problem of poverty linked to lack of access to electricity. And then finally, just one other example of a deal now that you can do that you couldn't do a few years ago. That relates to agriculture. Huge carbon producing industry, fundamental to our survival on this planet. More people are going to need more food. And yet, what hasn't been possible until today, we invest in a company called Farmers Business Network that brings big data to bear on farmers' decision makings. It's not surprising that even though farmers have collected data on their tractors for many years, they haven't really had access to it. It's always gone to their vendors. So not surprisingly, they water too much. They use too much fertilizer. They plant too many seeds per row. They use too many chemicals. They don't have to do that in order to have the yields that they need to stay on their farm. And now, because of big data and innovation, you are able to bring that information to allow farmers to network their data, see what best performing practices are, and make a better living and be able to stay on their farms. So these innovations are allowing sustainability investing to go far beyond just the power plant and the rooftop into some of the most important sectors, industrial and agricultural sectors of our age. So this chart just really want to sum up for you where we've been over the past 10 years. And basically, this shows for the past 3 years, the performance of a clean energy index, a NASDAQ index, and SolarCity and Tesla, which are really the first iconic replacements for 20th century fossil companies. I mean, these are the two big companies that are taking some of the mind share away from their 20th century equivalents. There'll be more, but these are ones that we're very intimately familiar with. And you can see that it's been a high beta ride, but a very successful ride over the past 3 years. And obviously, venture investors that were in before that were able to derive very successful returns. What happened, though, in the 2006 to 2008 timeframe is that there were a lot of tourists in the market that had come off of a dot-com demise and decided to go into clean tech. Too much money chasing lower quality deals, and so you kind of got what you would expect. You got a lot of failed investments, and so that was something that took a while to recover from. There was an overreaction, as there often is, between 2008 and 2012. It was very difficult to fund anything in this sector. There were political issues, of course, that came through that period that made it even worse in terms of the headwinds. But where we are now, ever since about January 2013, we're right-sizing this investment sector, and we're getting, as I mentioned, more international participation, more strategics, more family offices, and the quality of our entrepreneurs is going up all the time. We're investing in second time around entrepreneurs, which is always a healthy signal. And this is really, while we could always use a few more players, you can get deals done now, and the good news is that we don't have stratospheric valuations in this sector like we do in some of our tech deals, so you can get good value. And so you need these iconic companies to grow a sector, but I just want to call your attention to this little Nextracker line on the bottom. You also need just blocking and tackling companies. Nextracker is a company that builds tracking systems so that you can get more profitable solar farms because the panels follow the sun. Not It's not a moonshot, as was referenced earlier, although I think that's kind of 20th century. I think we should be talking about Mars shots. We're also a SpaceX investor, so full disclosure. But anyway, it's a good sound improvement that improves the profitability of solar farms. And it's not famous. It ended up being acquired by Flextronics, a big outsourced manufacturing company. But my point is that in 18 months, that company went from, because of the time that it was created, no one valued it, maybe it was worth, I don't know, 10 million when it was founded. 18 months later, it was sold for 330 million. I mean, I challenge any of you to not like an investment like that. And yet, we don't hear about those success stories as much as we hear about all of the failures in the market. And so I think part of our narrative really has to be, and in my recommendations in a couple of minutes, I'll argue that we need to celebrate and lift up some of these clean tech stories. I can't be in the Paul Brest Hall without talking about impact investing. I know Paul isn't here, but he's one of the leading thought participants in impact investing, which is the field we're in and we helped to create. I don't always agree with Paul, but I really respect the intellectual rigor he brings to our field. And so I'm not going to spend a lot of time on this, you can look at it later, but impact investing is super important to clean energy investing because it's a field that was nowhere 12 years ago. The top part of this chart is really the evolution of the field, and the bottom part is sort of the evolution of our firm as an impact investor. And in the early days, it was only Community Reinvestment Act banks that would invest in this kind of stuff, and foundations through program-related investments. And so it was slim pickings indeed, very hard to raise funds. Today, you've got BlackRock, Goldman Sachs, Morgan Stanley, Bain Capital. I mean, everyone is into impact investing. And that's good news indeed for clean tech and sustainability investing, because impact investors, they want to make money, but they want to make social, environmental, and economic progress as well. And so what you're able to do is bring in a whole new group of investors to the sustainability scene. What I call it is sustainability is return candy for impact investors, because you can get the financial return, you check that box, but impact investors want a lot of things. And this is just an example of two companies. Many impact investors want to do something that is avoiding excess carbon. A lot of impact investors want to create quality jobs. Look at the job creation numbers of Tesla on the left and SolarCity on the right. Stunning. I mean, our tech companies don't create nearly as many job opportunities and a much more diverse set of employees than you'll get in tech companies. Policy engagement, these companies and their similar cohorts are helping define the policy, working with people like Michael Picker and Stephen Chu, really getting policy for the next century. Manufacturing, a lot of impact investors want jobs to stay here, not go offshore. The fact that the Model S is built a few miles from here, that didn't happen by accident. That was intentional. That took a lot of work. Impact investors like doing that kind of thing. In the case of Tesla, impact investors like that people love their cars, and so an electric vehicle is the Trojan horse for increasing energy literacy. Once you have an electric car, you begin to wonder, well, where does my electricity come from? And then often there's a correlation that we see often where people end up getting solar or buying green energy. And then finally, democratizing access to clean energy is a huge priority for impact investors. And so these kinds of companies allow investors to make that social decision to start with an expensive product like solar before you could have a lease, like the Roadster or the Model S, and then over the years, through scale, through innovation, derive cheaper, better, faster products that are more accessible to a broader array of the public. So this is very, very important because this is the way that we're going to scale investment. And just as an example, that Africa company that I told you about, Off-Grid Electric, we were able, because of impact investors, foundations, and high net worth family offices, to do a loan fund to support the building of solar and storage in rural areas of Tanzania at commercial rates. That's just unheard of. I mean, it was hard enough to get US rooftops financed a few years ago, and the fact that impact investors lined up to create a $45 million fund that supports about 1 million installations in sub-Saharan Africa is a huge milestone that is a tipping point for all of us. And so this is why we're very bullish about our ability to continue investing, and other firms like us. Our last fund, because of impact investors, was oversubscribed, and there's plenty of opportunity for other firms to start and ride this wave. So in my last comments, I just want to pay attention to some of the recommendations for an administration to address some of the problems we're seeing. And really capitalize on our ability to grow a clean energy economy. So this is a chart of the per capita solar PV capacity by state, 2015 numbers. And the reason I show this is because everyone here is probably aware of the battles that are going on in some states. It's not at all a coincidence that the early adopters, if you will, in solar, the top 4 states, Nevada, Hawaii, Arizona, and California, are also where some of the most visible policy discussions and in some place battles have taken place. I mean, when you don't have a lot of solar, you don't have a lot of fights about it. And so what we need to do is, what the federal government can help to do is make sure, because when you see those top 4 states, only one of them, California, is one of the largest states in the union. California won, Texas, Florida, New York. So as a policy person, I'm concerned that 3 of our biggest states aren't up there. We don't have a lot of time. We've got to lower the carbon of our electricity in the states where a lot of people live. As an investor, I'm very bullish because I can see that those states are ripe for more solar growth. And so there's going to be while you heard a lot about these 4 states over the past 10 years, you're going to hear about some of these other big states if we can get the policymakers to help us avoid some of the mistakes that have been made in some of these skirmishes that we're seeing. And the fact that in some states like Nevada and Arizona, you're taking net metering decisions to the ballot box. That's a sea change. This is something that really has never happened before. It used to be very esoteric and done in regulatory circles. So what I feel that the administration can do is help these other states share best practices, get a more diverse set of decision makers around the table so that we can move these lower penetration states up. And I mean, especially a state like Florida, which is the 3rd largest state, and it is the Sunshine State, by the way, there should be, they shouldn't be down where they are. And so I feel that the federal government and the White House in particular can help here. And even in Nevada, during the primary season, the 2 Democratic candidates got involved. They weighed in on the Nevada net metering controversy. The good news is that it's looking like that will be resolved in the very near future at some level. We're not able to say exactly how, but some of the more extreme aspects of that decision will likely be turned around because of politics, not because of science, not because of engineering, but because the jobs, the public choice momentum is allowing for a political solution to what has traditionally been a regulatory area. So just in closing, a few of the to-dos that I would give, and Dan has been working on so much, and I'm going to let him talk about a lot of very effective approaches to financing. As a practitioner, I'd like to just ask that the next administration really do more of the convening and research function for giving a voice to the clean energy economy. We all love Elon Musk. I mean, he's changed our firm's performance in very dramatic ways, but I got to tell you, the entrepreneurs we see, they're not just Elon Musk. They look like America. They're black, they're white, they're female, they're male, they're rural, they're urban, and they should be celebrated, and they're making a difference. And we don't see that. We need to really have have a way of educating our population about that. We also need, this report that we talked about a few minutes ago, what would Jefferson do? Really happy to do that, but I do have a day job that's a pretty serious one, and I don't think I should be the one that has to write these reports. I think that the government and universities should dig in, and I have a whole list of reports I would write if I didn't have my day job that would be very, very useful in paving our path forward. So I'd like to suggest that we really get the government working with universities to do research that really helps, that matters. One example would be data transparency. How do we get the data from utilities to allow data companies, new entrants, consumers to really know what the true value of a particular energy paradigm is? A lot of that is locked up or it's redacted. It's very hard to access data, and if you don't have data to navigate developing your system, you're not going to really have the optimized approach. I also I'd just like to speak to the coal to green. This is something I will sign up. Whoever wins the presidential race, this is such a no-brainer. We have in our companies, we have the daughter of a coal miner and the sister of coal miners. She's one of our best salespeople in Utah. And she wants more of her friends and siblings to move into the renewable industry. We can do this. I know that the industry itself is very interested in going into coal belt states and developing workforce training, developing renewable developments in areas that are going to be transitioning out of coal. So I think that's really important to honor the folks that built our energy economy in the 20th century through coal and give them a ticket to the 21st century and the prosperity that they can have through that transition. And then finally, of course, the tax code. We do need to level the playing field with incumbents, with 20th century fossil practices, with the new entrants. Obviously, I agree with George Shultz and many others that a price on carbon would be ideal. I realize the political difficulties of that, but I think we've got to continue to work on it. In the meantime, the tax credits that helped us with EVs and solar and wind could help us with storage. I mean, we could have a storage tax credit that would help drive down the cost curve successfully the way we've seen in the past. I'm a beneficiary of CRA. My firm wouldn't exist if it hadn't been for banks that invested in us when no one else would. In our first fund, over 50% of our money came from CRA banks, and now we get less than 5%. The Volcker rule, the inability to qualify for Community Reinvestment Act credits for investing in low-income solar is really something that should be switched because it's a good source of money and it's place-based. It really does make sure that investment dollars are placed in areas that really need them. And finally, if we can't get that price on carbon, we should continue to figure out tax approaches to help to level the playing field. And just as I get a benefit and you get a benefit when you make an investment that you hold for a long time, you get a lower tax rate and a capital gains tax. How about deconstructing that a bit in a carbonless gains tax? Be rewarded for investments that do really reduce the overall carbon load and help us tackle the growing problem of global warming. So those are just a few ideas to get people thinking, and now I'm going to turn it over to Dan to amplify and expand. Thank you very much.
As some of you know, I don't go anywhere without my favorite triangle, the sustainable energy triangle. If we're going to get to a more sustainable energy future, it's about technology, policy, and finance. If you want to work on technology and clean energy, you better understand something about policy and finance. If you're a policy person in Washington, you better understand something about technology and finance. So these really do need to be integrated if we're going to get to where we need to get to. Let me start with how not to get started. If we're going to deal with climate change, this is my favorite cartoon. Only the New Yorker can put climate change and gun control together in the same cartoon. So, This panel is about financing clean energy, and particularly what should the next president do. So I want to start with a kind of a complicated slide, but that's because clean energy investment is a rather complicated area. This is kind of a prototypical chart that traces the entire path of some kinds of clean energy technology. This might be big hardware leading to a new wind turbine or a new carbon capture unit or any number of things. It starts, no surprise, with basic research brought to you by the federal government. Applied research, more of the same. Nancy's world, the world of venture, begins to creep in at that point, moving things out of the lab and into a startup. Then we get to these big areas where we've got to jump from the initial technology in the lab to a demo, from a demo to a large initial scale-up project, and then to a second one. That's where the world of private equity comes in to help fuel that growth. And ultimately, what we've got to get to, we start with innovation, we move to commercialization. Ultimately, we've got to get to large-scale deployment, and that's a mix of equity and debt. That's measured in the not millions of dollars, but the hundreds of millions or billions of dollars. So a quick look at how we think about the development of these across the financing spectrum. The good news is that the president, the next president, has many tools at her disposal. From things at this early stage, innovation, federal R&D funding, the Advanced Research Project Agency for Energy that sits inside DOE, grants, loan guarantees, tax credits Nancy mentioned, these so-called tax advantage structures, master limited partnerships, real estate investment trusts, private activity bonds. These are things authorized by the Congress that have some specific tax advantages to them. Federal procurement, what the federal government itself can buy. And then OPIC, and to the extent we have EXIM around, helping people move their technologies from this country overseas. And then the big three in terms of policy, EPA's Clean Power Plan, fuel economy standards, and energy efficiency standards. So let's quickly walk through that innovation, commercialization, and deployment spectrum. Comes to R&D, the big important piece is, in fact, mission innovation, as Arun talked about briefly this morning. Doubling federal R&D spending over the next 5 years. The U.S. and 19 other nations, this would be a big increase from about $6 billion to almost $13 billion in 2021. Multiple agencies, although the biggest piece of that is the Department of Energy. And it is a heavy lift. I have to disagree to some extent with Secretary Schultz. When Secretary Moniz announced the proposal to double over 5 years, I wouldn't say that was heartily embraced on Capitol Hill. This is going to be a real heavy lift, and I think that's going to be a challenge at this level of R&D for the next president. Turning quickly to commercialization, one of the big tools has been the loan guarantee program, put into place in a series of laws, actually. There's 3 different loan guarantee programs, but they finally, all 3 of them got financed during the financial crisis by the Congress. $35 billion to date of loan guarantees issued across a whole range of technologies, transportation-related technologies, power technologies, and it's been a very good investment. Estimated losses, just 2%. 90% of the so-called loan loss reserve is still there and available. Unfortunately, when we talk about this program, we talk about Solyndra, the S word. But what we don't talk about, Nancy referenced, is a company like Tesla. Tesla's factory here in Silicon Valley was helped by a $465 million loan guarantee, paid back 10 years early. This is a good, strong program. And the thing that most people don't realize is we've got $40 billion in remaining authority. Having said that, the current program, moving that money out the door, is not a simple matter. And so one of the challenges for the next president is, in fact, to reinvigorate this loan guarantee program. Another piece of commercialization are grants, federal grants for energy. across nuclear, renewables, fossil, including carbon capture, a whole host of things where billions of dollars move out of the federal government, to a large extent the Department of Energy, and are put in the hands of people moving these technologies into the field and deploying them at scale. But there are big challenges. This is a simple example of floating offshore wind technologies. On the order of $150 million of grants have been announced, but a relatively small percentage of that has actually been spent. These companies trying to move this technology forward have had challenges. Ultimately, I think it's a very, very important technology. Ultimately, it's going to work. It's going to come down the cost curve, but this has been tough. Same thing with carbon capture and storage technologies. Lots of announcements, but just a couple of weeks ago, a $350 million grant made to a project in Texas was pulled back. That's not going to get spent. So, challenge for the next president, tuning up these clean energy grant programs. All right, let's move to deployment. Some talk about the clean trillion. It's an interesting phrase, and it does capture something rather important, which is that total global investment in clean energy today is on the order of about $300 billion. A simple analysis suggests that if we're going to stay within this 2 degrees centigrade increase in global temperatures, we've got to pretty quickly be moving to about $1 trillion a year in investment in clean energy globally. You can dispute these numbers, but I think the bottom line is we got to put a lot more money to work, and quickly, if we're going to have any shot. The big money is not in the federal government. The big money is not in venture firms, which deal with that early stage. The big money is in these major institutions. Not trillions, but tens of trillions. Pension funds, insurance companies, sovereign wealth funds, foundations, endowments, family offices. A big challenge for the next president is how to help unlock these trillions of dollars. And there's a lot of ways that we can do it. One of those ways is, in fact, through the incentives that the federal government can provide for clean energy. You can move private sector capital into the deployment of clean energy if you provide some incentives. That's what, for example, the tax credits are about. Lots of progress of late with tax credits. As most of you know, both the wind and the solar tax credits have been extended for about 5 years. There are some have-nots who either didn't get an extension or only got a minimal one. Geothermal, biomass, fuel cells, combined heat and power. And even the ones that have gotten an extension, wind and solar, those are going to start to ramp down, in the case of wind to 0, in the case of solar down to about 10%. So the question is, over the long haul, as these phase down, what else can we be doing? And that's what these tax advantage structures are about. Master limited partnerships have been used for $500 billion worth of investment in oil and gas pipelines. A tax advantage structure. There's pending legislation on Capitol Hill right now to open up the master limited partnership law to renewables, to efficiency, to carbon capture, to a whole host, to storage, a whole host of technologies. Real estate investment trusts. Those have been extended beyond real estate to things like cell towers and billboards. We've argued cell tower kind of looks like a wind turbine minus the blades. Why aren't we extending real estate investment trusts to wind turbines? In fact, there's a pending proposal sitting at the Treasury Department right now, taking comment, and the president could do that tomorrow, could open up REITs to renewables, put something else like that. Private activity bonds, $100 billion worth of those were used to clean up air pollution in the United States at power plants, putting on capture units for particulates. We've said, all right, we did it in the 70s and 80s to capture particulates. Let's do it in this decade to capture carbon. So a nice bipartisan bill introduced a few months ago in the Senate just to do that. Let's open that one up. So the challenge, though, is getting these things done. The president establishing reliable long-term federal investment mechanisms for clean energy. Governor Granholm today said the states are important. They're key partners. We've really got to stress that. We've got to move beyond the battle over the Clean Power Plan and realize there are some real productive cooperative relationships with the state. Andy Karsner's home state of Texas. One doesn't always think about that as a leading renewable energy state, but far and away the most wind developed in the U.S. has been in Texas, close to 20,000 megawatts. They've built 3,500 miles of transmission lines in Texas. We can barely cite 1 mile in the rest of the country. And $7 billion worth of investment in those transmission lines. So there are lots of ways, as Governor Granholm said, to sit down with these states and their 50 public utility commissions and their 50 legislatures to jointly work out how we're going to do well and how we're going to do good when it comes to clean energy in this country under the next administration. And I think that's a very exciting option for the next president. Quick case study, carbon capture and sequestration. I tend to think that ultimately we're going to have to be using more of it, on industrial facilities, potentially on natural gas power plants. The good news is that the technology has come along pretty nicely. The less good news is that we're still pretty challenged from a financial standpoint. And so there's lots of mechanisms that are either on the books now or being talked about, and that is this long list. One of the challenges is to take a comprehensive approach. Too much in this country will propose an incentive over here, a loan guarantee over there, a tax credit there, and we're not taking the sort of integrated, comprehensive approach to each of these vital technology when it comes to public policy, when it comes to financial incentives. So I think that's a real opportunity and a real challenge at the same time for the next president. And by the way, for those of you who don't know what POTUS means, I realize I didn't explain that. Inside the Beltway, the POTUS is the President of the United States. The VPOTUS is the Vice President of the United States. And there's all of these acronyms. I should have said that from the beginning. Now you know what the POTUS challenge is. So, finally, the next president's not-so-secret weapon, federal energy use. The federal government, our government, is the single largest energy user on the planet. $23 billion annually is what our government spends. 400,000 buildings, 400,000 non-tactical vehicles, add a lot more if you include a lot of Pentagon vehicles, 640 million acres of land, more than 25% of U.S. real estate. I didn't understand this a couple of years ago. The federal government owns 50,000 miles of transmission lines. Huge owner of transmission lines in the western U.S. And the Department of Defense and the General Services Administrations have established energy technology test beds. They're doing extraordinary things to test important technologies in the federal context and help spin them out, both inside the U.S. government, but also to industry. And the president has got a lot of tools when it comes to his or her ownership of the largest energy complex in the world. Procurement, buying gigawatts of green electricity, which the 3 military services are now doing. Finance, some financing mechanisms to actually get energy projects built across the federal system. Eminent domain, a tool we need to site transmission, and the power marketing administrations, Bonneville Power, the Western Area Power Administration, which own these massive transmission systems. So, to wrap up, the next president is going to have many tools, many tools, but many challenges at the same time. But I think the good news is that I think we can wrestle many of these challenges and in the end, both do well and do good when it comes to clean energy and climate. So thanks very much.
You both set out a variety of things that the next president of the United States might do in order to increase the amount of financing available for clean energy. I want to start out by asking you both just sort of a realistic political question. If you're just playing the odds, we're going to end up with a Democratic president and a split Congress. It might very well be the Democrats retake the Senate, but you probably still have the Republicans in control of the House. So 2 questions. Number one, if we still have a split Congress, how serious of a problem is that from the standpoint of accomplishing the type of financing goals that both of you are talking about? And second of all, do you see a realistic package of financing measures that the next president could get through a split Congress?
You go first.
Okay.
So a Republican House, a Democratic Senate, and a Democrat-led White House. So essentially what we've got now.
A little bit before.
So I'm something of an optimist when it comes to what you can accomplish in this area, because I think increasingly folks across this political spectrum realize there's money to be made in clean energy, and I'm hopeful that over time people are, in fact, a broadening number of people are realizing the climate crisis that we face. So, when you have, states like Texas and Kansas and Iowa, stepping up in a pretty big way in support of the renewable energy industries in those states, I think we've got a shot. And with some new leadership in the White House, I think there's a lot that can be done. So obviously this agenda could get done even more quickly if the Democrats take the House. But I think there's a decent probability that some of what we need to get done can get done. In terms of financing mechanism, there's a lot on the table right now. And there's a lot of things that we could do that would not only work for renewables, but work for capturing carbon dioxide, advancing nuclear power, some of the things that we need to do for a complete zero carbon approach to our energy system in the U.S.
Okay, but if you're introducing a package,
Well,
giving advice on what would be the 2 or 3 sort of anchor measures in that package.
Go ahead.
well, I just want to add that we just saw the investment tax credit get renewed, and while it didn't help everyone, as Dan pointed out, it did get passed, and it was so different than what we worked on in 2008 because of the jobs and because of the fact that there's no sacrifice anymore. Renewable energy, electric vehicles, their costs are coming down so that you don't have to sacrifice clean energy for price. And so what's not to like about that? If you're a red, blue, or purple governor and politician, those technologies, those businesses are creating jobs in your state, and that wasn't the case. I mean, there are over 200,000 solar jobs in this country. That's 3 times the coal mining industry. And everything is flipping, and so really it's at your own risk as a politician if you say no to sectors that are fueling job creation and quality job creation. So I don't think it's as big a battle as it was.
In terms of mechanisms, I think you start with R&D, and I'm hopeful. As much as I said, it's a heavy lift. I think given the breadth of energy R&D from nuclear to carbon to renewables and efficiency, I think there probably is a package that they can agree on with a new president pushing it. I do think some of these long-term financing mechanisms that I mentioned, I think there's broad bipartisan support for most of those right now. Because again, they benefit clean energy technologies across the spectrum. I think the Federal Energy Regulatory Commission, the FERC, has a lot to say about what's happening in this energy complex of ours, what's happening in interstate movement of energy. And so I think the new president is going to have a chance to make some changes there and give that agency some new authority and some new direction. So there's a whole package of things, but we'll see.
I would add to that, allocating some funding for unlocking the data and making that widely available, because that will build the infrastructure of the future. That would be a very bipartisan thing to do and very helpful in terms of getting rid of the overhang of incumbents and monopolies and all of that.
So I'm curious, Nancy, one of the things that you mentioned earlier is that this is obviously a global market now. If you look at what other countries are doing in order to try to promote clean energy through financing mechanisms, are there lessons that we can learn elsewhere?
There's all kinds of great incentives. I mean, the fact that Norway has more EVs per capita is not an accident. They have a tax on gas fueled cars that make electric vehicles very economical by comparison. and it's a very substantial benefit. You see Germany, of course, favoring not just renewables, but also now with a storage rebate. And there are a lot of lessons we can learn from other countries where they are passing laws that are making very bold commitments. The advantage that we have here in the US is our capital markets, is our innovation, our ability to start new companies and redefine really what energy looks like. And so I think that we should play to our strengths. That's why some of my suggestions were things like learning the benefits that we had from the ITC and the PTC and the electric vehicle rebates and applying that to storage. Because storage is, it's trite by this time, everyone says it, but it is a game changer. It really does allow us to use renewables to transfer something that is episodic into more of a baseload resource.
I'd add that there are huge investment opportunities that U.S. investors have in other countries. So you look at a country like India that went to Paris and made a commitment to build 100,000 megawatts, 100 gigawatts of solar by 2022. That's a big target. But if India continues to make the changes in its approach to electricity, its regulatory system, its financing systems, they will increase the interest that investors in other countries have in putting money into the utility scale system and the distributed system in that country. So there's a lot that other countries can do on their own, but there's a lot that the global investment world can do to move some of these agendas forward in critical places like India, the third largest carbon emitter on the planet.
For example, Tanzania, the former president there started a million solar roofs program, just like we had in California. The only difference being that a million goes a lot further in Tanzania than it does in California, just because it's not as populous an area. So having that kind of a policy attracts venture investment from this country into companies that will sell into those regions. And so it helps us at home, and it helps us solve one of the most important problems of our age, which is energy poverty, which is directly linked to economic poverty.
So both of you are clearly optimists in this particular area, and I think justifiably so. But I actually want to end with sort of the opposite question, which is, what do you worry about when you look out there at whether or not we're actually able to finance the type of energy transition that we need in order to address climate change? What are your one or two greatest concerns?
Well, I have a concern, and I referenced it earlier, and sort of the motivation for writing our reports, is that the information is not robust enough, and people, they don't understand that we've always subsidized energy, and so they say that renewables are more subsidized than fossil, and that's just clearly not the case, and people should do their homework. But that's just the tip of the iceberg. People do that when they look at this whole net metering, which is not the long-term solution. We're not going to be metering for eternity, but it's important now, and the analyses that you see are often incomplete. They will look at the risks or the costs without identifying the benefits, and so you come up with skewed results that public utilities commissions then make policy around. And so I think, and it's a great role that universities can help play, is to lend more rigor and more depth to these studies so that we actually know what the value streams are.
Two quick things. One, I worry that we don't spend enough time on our lowest cost energy option, which is, of course, energy efficiency. People love this phrase, low-hanging fruit grows back. My favorite addition to that is, they love the phrase, it's low-hanging fruit. I love to say low-hanging fruit grows back. We're always advancing energy efficiency technologies. The incandescent gets replaced by the compact fluorescent, which gets replaced by the LEDs. And it is our cheapest energy source. It's not very sexy. It's tough in many respects to move money in the direction of energy efficiency investments. We've begun to crack the code. There are some interesting ideas. There's some people in this room who are working on that. So that's worry number one. Let's not leave behind the cheap stuff that we're really going to need. The second, maybe a little bit more controversial, But I think energy has taken on sometimes religious tones. You know, I'm a renewables person. You know, I'm a nuclear person. I believe in carbon capture. And we have a hard time looking across and realizing that done well, a lot of these can be low carbon or zero carbon. And given the pace at which we've got to deal with the climate crisis, we are going to need them all. We really do need them all. And so I do think, as much as I'm a huge fan of renewables and efficiency, carbon capture does have a place. I think a big place. Nuclear does have a place. It's far and away our largest zero carbon energy source in the United States and beyond. So let's move away from the kind of semi-religious approach we take to these energy sources and realize we got to put them all, we got to get them deployed if we're going to deal with the climate crisis.
Okay, and Nancy?
I'm just going to disagree with that just a little bit, not to end on a contentious note, but, you know, the entrepreneurs, they are religious. They don't want to do everything. They want to focus on what they believe is going to create billions of dollars of investor value and is going to change the world. And that's really, if you look at industrial progress, that's really how we've been able to get where we are today in terms of our quality of life and our economy. And so you have to make choices. And a lot of the best and brightest, you know, the Elon Musk of the world, they don't want to work on some of those. They don't believe in them. They have a very well thought out strategy. You may not agree with it, but they are in a position to hire a lot of people and create these products. And that's really the way our economy works. So we do have to make some choices. I believe there is a role for a multitude of approaches, but I'm not going to place bets in areas that aren't attracting the best and the brightest. And that takes, you know, you can disagree with it, but it takes a little religion.
No, I don't disagree.
Last comment.
I don't disagree, actually. I'm glad that Elon Musk and a variety of investors have that focus. Mine only is the nature of the urgency of the climate crisis, and we need to be encouraging investment, placing bets on a very broad range of technology, because we may not make it.
Okay, with that, we have to turn the podium over to the next panel, but I want to thank both Nancy and Dan.